Hello and welcome to the day ahead. It is Wednesday, March the 9th. I'm Andrew Gagan. Well, oil and commodities, the sole focus for markets overnight, with US President Joe Biden issuing further sanctions targeting what he calls the main artery of the Russian economy.
We're banning all imports of Russian oil and gas and energy. That means Russian oil will no longer be acceptable at US ports, and the American people will deal another powerful blow to Putin's war machine.
The decision comes with a cost to consumers, with prices at the pump spiking to record highs, hitting $4.17 a gallon, around double the cost of a year ago and more than 40 cents higher than a week ago.
Putin's war is already hurting American families at the gas pump. Since Putin began his military buildup on Ukrainian borders, just since then, the price of the gas at the pump in America went up 75 cents. And with this action, it's going to go up further.
Energy giant Shell has halted its purchases of Russian oil and gas and will close service stations across the country, while the UK has committed to phase out the import of oil and oil products from the country by the end of this year. Crude continues to go gangbusters on the moves, with Brent up 4% and WTI up more than 3.5%. Well, on the markets, another wild session on Wall Street, with all three of the majors closing lower after a rocket session with a spike in energy on the back of that oil ban from Russia, not enough to offset a lag in defensive names. Plenty of company reaction and sanctions to the ongoing invasion. Starbucks will pause all business activity in Russia, including shipments and cafe operations. Amazon has stopped accepting new cloud computing and AWS customers in Russia and Belarus. And McDonald's says it's temporarily closing all 850 restaurants in the country, but will continue paying staff. Looking at the bigger picture, the war in Ukraine and its economic effects will be pivotal for upcoming central bank policy meetings. The European Central Bank meets tomorrow, with the latest key inflation measure tracked by the bank lifting to a 9-year high. Meanwhile, an EU heads of state meeting will discuss potentially issuing euro-denominated bonds to support the cost of defence and security in the region. In US economic data, the Business Optimism Index fell in February from 97.1 to 95.7 I should say, but that was in line with expectations. The biggest drag was concern of rising inflation and worker shortages. The trade deficit rose from 82 billion US to 89.7 in January, which is more than forecast. Chain store sales in the past week were up 13% on a year ago, but down more than 13% from the prior week. Ahead of the Fed policy meeting next week, Treasury yields are rising, the 10-year up 12 points to 1.86% and the 2-year yield at 1.62%. Major currencies were mixed against the US dollar. The euro recovering from a 22-month low, lifted by expectations the Eurozone will increase fiscal spending to help offset the economic impacts of the crisis in Ukraine. The Aussie dollar touching highs of 73 cents before falling back to be at 72.7. So how's this all setting us up for trade here today, this Wednesday? SPI futures are higher, having experienced wild swings overnight, reflecting the gyrations of the Dow, currently up 0.25%. Commodities will remain front and centre. The price of nickel has skyrocketed, having doubled on the London Metal Exchange overnight, which prompted a halt in trading at the metal on the exchange. Aluminium fell by 7%, having earlier hit a record, while copper, zinc and iron ore fell marginally. Spot gold was up close to 2% to trade at $2,037 an ounce. Well, here at home, focus will be on the impact of those surging oil prices alongside companies' responses to the invasion of Ukraine. Qantas already trying to get ahead of the fallout, warning its fuel prices remain at these levels, or if they do so, the airline will need to raise airfares. Meanwhile, refiners here locally have stopped buying Russian crude oil in a bid to show support for Ukraine. Ampol saying it has not bought Russian crude oil or products since the conflict began. Viva Energy also joining the ranks, saying it was appalled by the events, adding it sources crude from many different countries and would be able to maintain supplies as the Australian transport energy market is not overly reliant on Russian crude. Viva operates in Australia under the Shell brand, which overnight confirmed it too would stop buying oil and gas products from Russia. And that is your day ahead. See you again tomorrow.